right. Tuesday, January 14th, 7:18 a.m. Eastern Time. And futures have been up all night. I don't really believe it means much. Because there is these numbers coming out at 8:30. So be it that it is up, I think the story of the day, and it's really not of the day, it's really of the last 24 hours. I mean, we had Bitcoin down all the way to the lows here, 89.28. 89.28. And now back at just off its highs. We got back to 96. Yeah, it was 96. Let's see if I can get that candle. 97, 353. So, incredible run here on Bitcoin in the last 24 hours. Huge range. And with that being said, all the headlines, Bitcoin rebounds above 96K amid global stock gains as investors focus on key U.S. inflation data. And then blah, 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 right? Whatever. It went up. And then, now all this one's from Crypto Potato, Bitcoin to face more volatility in the short term as U.S. Treasury yields surge. All right, whatever. So anyway, that being the case, and I did say, I don't want to be like, oh yeah, I said, I mean, I'm jokingly saying this. Like, I did say if it went below 90, we'd close up on the day, and we did. It wasn't great, but nonetheless, we did close up. So, and here we sit today. Unfortunately, I've already taken out R2, so that's kind of my trade of the day. And we weren't, we did break out and break down here. And if I was going to do anything here this morning, this would have been where I would have done it, right here. But I was sleeping, and so be it. I did want to do this real quick because there were some folks asking. So it's the VRVP, which is the volume profile, the SPVP, which I'll show you how I have that set up in a second, and the pivots. That's it. That's all the only indicators I use pretty much across the board on everything. So there are some things I'm playing with. Look, I was playing around with this super trend. Somebody was telling me about it. I've had it up I've been using this, or at least had it on the screen here for a couple of months. I don't know what to make of it, quite honestly, but I've grown comfortable with it. I mean, I guess that's maybe the excuse I'm going to use of why it's here. When I see these buy or sell signals, I don't know if they've really been true or not. And I really can't. And I've been wanting to back test. I just don't have the time. I've been wanting to back test. I made some changes to the default one, but I'm going to play around for another month or so, and then I'll tell you what I think, and I'll show you how I have it set up. And if it works, I'll be more than happy to share it with everybody. Because, again, who cares? I'm not going to market it and sell it, so I might as well let other people know if they feel like they can make money off of it. But when these things don't, the problem, and it's really not even this indicator, it's any indicator. Nothing is going to show up and say, and foreshadow and say, yeah, buy here. Yeah, oh, here's a buy. It's just not, it just doesn't exist, folks. I'm sorry. And then, algorithmic stuff, hey, fine. You want to put your trading in the hands of an algorithm. If you have faith in it, that is fine as well. Go for it. If it was something I wrote myself, I would have no problem doing it because, it's my code and I'm at the whims of my code. I have a problem with it because I don't want to rest my finances on someone else's shitty shortcut code releases. And because I know that's what it is, right? I mean, these things are not coded well. They're patching them all the time. So anyway, be that as it may, right? Isn't that always what people say? I did want to do this real quick on the pivots. Because someone's saying, someone said to me, aren't pivots old? And, if the pivots were floor pivots, and that's true. That is true. The pivots were floor pivots that the floor traders actually would use to indicate areas of interest. And so here, look, if you go back to yesterday, here, I only have one day. So I'm always showing just the today's because I don't want to get my brain confused about all these different lines on the screen. And I like things clean. So anyway, so let's just go back to yesterday. And if you are a pivot trader, now nothing is 100% in stone, right? Nothing is going to tell you exact areas. But if you were looking for a place to go long yesterday, I always talk about S2 and R2 being extreme areas on the daily that there's a good probability, more than 50%, that there's going to be either a pullback there on R2, right up here. There's either going to be a pullback when it gets through there, or there's going to be a bounce when it gets through here. Well, here's yesterday, and here's R2. Now, it happened early in the morning. Here's 5 in the morning Eastern time. But look, it breached, and then it proceeded. And this is an hourly. It's always good to look at the hourly on these. I firmly believe that the hourly chart on pivots, if you're looking for reversals, are the place to look. And then drill down from there, right? Go hourly, and then whatever you want to use for your shorter time frame. I prefer tick charts. They don't have them in, well, they do have them in TradingView, but they want to fucking charge me, upcharge me another charge to fucking get tick charts. Like, what the fuck? But so anyway, I've just learned to deal with not having them. So, and it's not a big deal. So anyway, here's the reversal yesterday. I mean, and you can see, right? We kind of breached the support. The next candle was green, and that likely should have been your area. So, and if we would have went into and if I drill back and did like a 5-minute and then just went back there, you can see here's exactly what happened on a 5-minute, right? We made lows in here, and this would have been enough. This wouldn't have been enough for me to get long at that time at 6 o'clock in the morning because I was sleeping. But we had literally chopped around that number and made every indication that it was not going lower. Here's a lower. Here's lows that were made, but it wasn't a lower low. Here's another low that was made but it still wasn't a lower low, right? And so we progressed up. And so this gave, and again, I was off doing other stuff. So I wasn't trading ES. I have a job. So folks, I have another full-time job that I'm dedicated to though. So if like stuff doesn't set up on the ES for me and by 8, 9 o'clock and I haven't watched it, I'm not doing any trades. So, if you have other things that you do, if that's all you do in the day, that's fine. Then you would have seen this. I would have gotten long. That spot where I would have gotten long is right around the 1030 reversal, because here it is. We actually rallied. Here's 1030, and 1030 wasn't right on the nose, but 1025, there's a 5-minute. There's the reversal there. And I would have gotten this trade, and I would have been out probably for the day. That would have been good enough for me, and plenty of ticks there, almost 30 handles. All right, from 58.20 to 58.50. We did pull all the way back, right? This was the shakeout. And people talk about, these clowns on here, and, look, whatever your belief is, and I don't want to call them clowns. I mean, they're believers. These ICT folks, trust me, what they're doing has been around forever. And people have been using the volume profile for this, and they've been using pivots. And when they talk about, here's liquidity, it's all bullshit. It's all bullshit. It's all made up terms. And I'm not even saying they're made up terms. They're made up instances of the market to make the strategy. This is all it is. You're buying support and selling resistance. That's it. That's been around for 50 fucking years. 50 years. And so again, here it is. And look, I would have gotten shaken out on this pullback back down to and this is S2. I would have gotten shaken out of that. And likely I would have been up here. I would have probably pulled my stop all the way up. I'm just telling you what I would have done. And I would have been out for the day. And I would have been more than happy taking 25 handles in here in the ES and having a nice day. You do the math at 1250 a tick. I would have been more than happy to take that for the day and be done. And say, you know what? Thank you very much, Mr. Market, Mr. Mrs. Market, or they market, whatever your preference is or pronouns. And that was it. And you know what? If you had the fortitude to go back in again here, it would have shaken me out because, look, it made a lower low here from the last previous low here around 12 o'clock. So I would have not had the fortitude to go back into that trade. And catch this rally all the way back up. And so, look, hindsight, this was the spot to get in yesterday and ride it all the way up. Yep, and I'm sure there's a million people on Instagram with fake accounts that'll tell you, yeah, whatever, dude, whatever. That's good for you, and I hope you made some subscribers from your bullshit story. But that's reality, folks. So anyway, pivots work. And again, they don't work all the time, if it was 100%. But as I said, when you see the market go through S2, R2, and I wanted to show you a perfect example for yesterday because it was right there in front of your face all day. Those are really key areas to take in consideration of doing a reversal trade. And a reversal trade is not trying to catch the whole move from down here all the way up. That is not a reversal trade. Is taking it right around where I had said 1030 reversal, and then you're getting out right around here, and you're looking for 20 ticks. 20 ticks. This is 30. This is 30 handles, but I'm usually looking for like 20 ticks, and I'm done. That's it. That's all you're looking for. You're just looking for a little gravy for the day. You don't have to catch the whole move. So anyway, that is kind of the a little analysis there on, the pivots and do they work? Because I've had people even say, oh, they're old. Yeah, they're old as shit. They're older. They're probably not older than me, but that will disclose my age. They're definitely not older than me, but they've been around a long time. And look, if something ain't broke, don't fix it. And you have a million people out there trying to reinvent the wheel, create catchy phrases about what things are, and it's support and resistance. That's it, folks. They're not liquidity zones, and it's support and resistance. You buy support, sell resistance. That's it. I don't know how much more simple to make it. I mean, don't overcomplicate this stuff. And I'm not saying it's so simple. The point is that, look, you're going to be wrong. That's what you have to just come to the realization, that you're going to be wrong probably more than 50%. And if somebody's telling you different, then I think they're just lying to your face. The thing is what makes you different, it's not being wrong. It's when you're wrong, you're not wrecking yourself. And that's what I learned over the years, is that, look, I'm more than happy being wrong on the wrong side of the trade. I just don't let it wreck me anymore. I get the hell out of the way. I'm like, yep, you know what? This one didn't work. The market got the best of me. Have a nice day. I'm all grown up now. I can take my ball and go home, and I don't have to care what the other kids on the playground think. Because quite honestly, there is no other kids in the playground when I'm here sitting in front of my screen by myself. There's nobody else. There's nobody judging me. There's nobody calling me a loser. There's nothing. So anyway, that is that with the ES. I don't really have anything today because we've already breached R2. The only place that I'd be looking for an entry today would be right around S2. And you can see we kind of stopped down there yesterday. So the range is a little wider, but that is really the only spot that I truly like today. So with all that being said, that is that. Yes. Okay, so 114 at 2025. All right, and so that was really only place because, again, at R2 is going to be tough because normally what happens once it's breached for the day, the trading day, chances are when it goes and retraces that area, there's enough buyers in the market to kind of blow it out. And I don't put a lot of weight on R3 as an area only because it just hasn't proved to me over time to be an area that's respected. So anyway, consistently, not to say that it won't, we won't get up here and then there'll be a reversal. They may well be. I just don't find them to be as consistent as the R2 and S2. So anyway, that's the story there. And then you have all these numbers. You have all this economic data, right? All PPI, NBI, right? Coming in 52 minutes, big countdown for the PPI. So that is, I think, what has the market at this point a little on edge. They're waiting for those numbers. We don't trade the NASDAQ. We'll put up natural gas. Natural gas has been very, and nobody cares. I'm only going to talk about it for literally 15 seconds. Nobody cares. Huge gap up yesterday, last night, and then they proceeded to just club this thing to oblivion, and they continue to beat it today. These are big moves. I mean, this is a 3% move. This is a big contract, natural gas. So anyway, that's just interesting there as that goes. I don't think there's any trade there. I think it's all over the place, and I quite honestly don't want to have anything to do with it. Crude oil, same thing. I really have no say. Just looking at gold, gold has been all over the place as well. Gold had a pretty good day yesterday. Also, that also participated a bit in the rally. All right, and that is kind of that. And then volatility overall did expand earlier, but then proceeded to kind of pull back. Didn't really collapse. Still over 18, still elevated. And that is kind of the story about that. So now what's going to go on today? You do have earnings now that are going to start coming out. And that is going to be the story overall. So just looking at our high IV stuff here, UAL is still at the top of the list. That had a rough day yesterday. I think it was off like $3.50. I'm still getting beat up I'm in a call spread. I'm in a short call spread. Yeah, it's pretty ugly. I think I'm in like a 105, 100 or something. Or no, it's a 195. Not looking good on that one. Really hit a foul ball on that one. But hey, I didn't think the airlines were going to continue to go higher for like no reason at all. Anyway, you have CVS up here on the high IV. I was looking at this yesterday. I don't see any there with this one. Quite honestly, I just don't. I was trying to play around with a trade yesterday with it, and it just doesn't seem like there's, even though volatility is high in there just doesn't seem to be too much juice in those options. And be it that it's only like a $5 move here in February, you're not going to get, I don't know. I don't think there's nothing going on there. And so you do have some new ones I've seen on the list. You've got AT&T. We already did a trade in there, but that continues to stay bid as far as volatility is concerned. So I think that's still worth a trade, as much as that's a piece of garbage. I get it. You're really not looking for a big move in there. I mean, if that thing kind of just creeps back to $23, which is $2, in the next 38 or even 93 days, if you want to go to April, they have no March. You can do something in there, I think, for sure. The only thing I'm doing in there is I'm just short some puts. I think that's the easiest way to fly with that. But anyway, then let's look at some of the earnings. And those are going to start to announce tomorrow, I think. Earnings, and we will go with tasty earnings. I always like to do tasty earnings because I want to be usually the ones that they recommend to do. And let's face it, that's what they're doing here with these tasty earnings. These are ones that they're doing trades on, and I stick to those because they generally have the best liquidity. So so tomorrow morning we got Citigroup, we got JP Morgan, and we got Wells Fargo and Kinder Morgan. I don't think I'm going to do anything in there anyway. There's not much to do in there. Oh, and Charlie Schwab, but they don't say whether it's the morning or not. So anyway, tomorrow is going to kick off. So these are trades that you're going to need to do tonight before the close if you want to play these earnings, because they all come out tomorrow morning, Wednesday the 15th. So Citigroup, we'll look at Citigroup real fast. Volatility at a 42, definitely elevated over the average. Stocks had a really good run, as have so all the other banks as well. Have had a good, so has every other freaking thing, right? Has had a good year in the market. So if we're going to be doing anything, likely we're not going to do January. Although January could be interesting, but there's just no. The only way I would do anything in January is if you're going to play like a bearish trade for earnings, and I would sell the calls. I would sell the 75s. Market's a little wide in here. I'd have to see how these discover when they open. But I would sell the 75 calls. If you were looking to do something just for earnings, but we're not going to do that. Let's go out to February is going to be where it's at. First, we'll look at the one standard deviation strangle, which is going to bring us to, now this is going to be inside because there's just no juice. There's no juice in here outside of the 1 standard D. So this is just inside the 1 standard D. You're getting about a 4.6 theta on this, 70% probability of profit. You are outside the expected move, right? The expected move is $4.30, 34 cents. So you're outside that. They do have these 2.5 wides. So you could do a small little baby iron condor in here if your account, right, if you want to do small trade. I actually like this little trade here for earnings. Even though it's kind of tight, you bring in 62 cents and you don't use much buying power. You got a 65% pop. And you're only using like $190. So to me, that's a nice little trade. And then if you want to widen it out, just go out one further. This one's going to give you 94 cents. The Iron Condor, $5 wide. I actually don't really like that one as much because to bring in 94 cents and use $400, I don't really care for it. So I think the one here is do the baby one. I like that one better, only because it's like, look, you're not using a lot of money. And your goal here would be to try and make 50 cents on this. So sell it for like 62 cents. You're going to get a little volatility increase today during the trading day. And then around 3:30, start trying to put this on. I would try to put this on for about 62 cents. And I think that's kind of in a sweet spot. So there is a one in Citigroups. Next is JP Morgan. Definitely not going to do anything in January. Expected move is $13.70. Let's do the 1 standard deviation strangle. There is definitely put skew in here to a degree. Let me see. Where are we at? We're 245. Yeah, there's definitely put skew, right? No, I'm a liar. Nope, no put skew. It just looked like it because the 2 standard deviation put. No, forget that. 220, 270. That is the strangle. That is the one outside the 1 standard deviation strangle. And it is not $21,000 worth of buying power. That's only because I don't have, I don't have margin in my IRA. Look, I don't want it. I don't need it. I wouldn't do this in this account anyway, so that's why this is showing $21,000. And I would never do a trade that needs $21,000 worth of buying power. I don't have that kind of. I shouldn't say I don't have that kind of. I don't want to put that kind of juice in any trade, especially an earnings trade. So that's what you get for the strangle. Let's take a look at what the Iron Condor is going to do. I don't think it's going to pay much. Yeah, it's not even paying $1. If I were let's just take a look at the chart real quick. JP Morgan, let's see. And I think it's actually maxed out. Let's just go to TradingView real quick. And go to JP Morgan. So all-time highs here are 540. You call it 255. 255. And they're looking for a $13 move. I mean, I'd be willing to skew this inside here for earnings and do this. That's what I would be willing to do for JP Mogone. Would do the 220, 215, and then do this 260, 265. I'm inside the one standard deviation. I actually made it a bearish trade. You notice the delta here now is about 4. So I actually got a little negative delta. And I'd be willing to assume a little negative delta on some of these banks only because I don't expect the numbers to be like off the charts. I don't expect them to be bad. But I don't know how, again, I'm looking at it like how much more room will these things need to go before they kind of peter out. And so I would skew this a little bearish. And the other side to this is like, look, if they do have a great earnings and it blows out and it goes to let's say it blows this out, it goes to 260, 265. I have 38 days for them to grind it back down below 260 and for this volatility, which is what this trade is all about, and this volatility to crush. So I'd be willing to take that risk. So there's my trade in JP Morgan for earnings, the 220, 215, 260, 265 Iron Condor in JP Mogone. All right, next, Wells Fargo. You can see I have shares here. Or do I? I was trying to do something and it wasn't working. I was kind of messing around with this one yesterday and I really didn't find much in here to do. If I'm a gambling man here, I'm likely gonna be selling some calls. There's some pretty decent call skew in here, but I wouldn't want to be just on one side. I kind of like the, and I don't know if let's try the ratio. I mean, a call ratio in here may not be a bad trade. We'll try the 80.77.5. No, that's not going to do dreck. That's not going to do dreck. Yeah. Right. Yeah. Yep. Yeah, that's not... That's not the good. Yeah, that one's not good either. I guess not a call. I don't know what to do in here. I think margins are good in here overall. They always have been. Wells Fargo is relatively liquid. Let me change my margin. Let's go to my margin account. I think I have a margin in here. Yeah, I have margin in there. Those are the real margin rates there. So the margins in here are good. If you want to do a strangle, so yeah, I mean, if I go out, I'm not even gonna get a buck. Yeah. Yeah, I don't know what to do in here. I'd like to do something only because the volatility up here is pretty nice. I don't know what to do. I don't know what to do. I don't want to do a put ratio. The strangle doesn't look... I don't know what to do in there. And then I'm not even going to look at Kinder Morgan. This one is not a very good. If you look at It says that the liquidity is good. I don't know. This thing doesn't trade that, and you can see the spreads in here are huge. And so anyway, those are the ones for earnings tomorrow. We got Citigroup, J.P. Morgan, and then Wells Fargo. I mean, your guess is as good as mine. If you want to get creative in there, I can't really find anything to do in there. There's really not a hell of a lot to do because it's a tight range. You know, I mean, I kind of like this baby trade like we did for Citigroup, this one here, because it's got the 2.5 wides. That's what I would do. All right, and so that's it. And then we wait on those numbers at 8:30 and see how things go. I don't know where we're at now. We're up 15. We're still chopping and a slopping. And so that's it. So have a good one.